Okay, so I'll introduce Michelle Hirsch with Brunswick Insurance. I had the pleasure of meeting Michelle last year at event for a private wealth manager for clients. I was very impressed with Michelle and her sister in their presentation and their outlook on how they handle personal insurance, especially for those in a higher net worth area. As people grow in life and their career and families. It's Jake from State Farm is not what everybody needs. So Michelle was, like I said, fantastic, and I'm very excited to hear what she has to tell us about how all of our fun current weather events affect our coverages and premiums and what we have to look forward to or not look forward to.
Thank you, Stacy. Yes. So, for the next hour, we're going to be on a journey. That journey is going to take us through an inside scoop in the property and casualty world that really just kind of talks through what's going on in our country from a weather standpoint and how that affects the property and casualty space. So, very excited to partner with Stacy and work with all the advisors um, to really kind of bring this to the front. Usually, I think the stat is only 36% of advisors are even mentioning property and casualty insurance. So, this is something that your clients are wondering about and definitely need to know more. So, here we go. Let's dive in.
Awesome.
Great. So, when we look at just weather and insurance and what can we expect, it's crazy out there. This image used to be just when you saw large hurricanes come through, and now it's a typical rainstorm. That just the water is coming so fast and so furious from the sky, and the infrastructure just cannot keep up with it. And there's no stopping. There is no from scientists and meteorologists. It does not look like this is going to be getting less fierce. And how insurance companies can navigate this is it's a challenge for them and for policyholders because obviously this is what insurance is for. So when we think about these climate disasters, um, they are in multiple different categories. Most people just think that it's the hurricanes or the wildfires because that's typically what gets the most traction in the media. But what people don't realize is I actually was just in a meeting to get the 2025 numbers that will be released shortly. But in 2024, that year was ranked second for the total number of single billion-dollar loss events. 27 different events that the insurance companies paid out over $1 billion. And when you think about that, um, and you think about 27 different times that carriers paid out on such large events, it is truly just not the hurricanes. We'll go to the next slide and you can actually see where these events are happening. So yes, you have a few of those hurricanes down south, but then the amount of these convective storms are the thunderstorms, the floods, the tornadoes, the severe rain that's coming where they just cannot keep up. It's truly in the middle of the country. So it's not just that these premiums are going up or the weather that we're talking about is on the coasts anymore. It truly is the whole country. And it's everybody paying for everybody. That convective storm, when we look at the payouts, hail, I would say, is definitely the number one culprit of what they're paying out. And what we're seeing now is because the hailstorms are so damaging, we're having a lot of roof issues with carriers. soon as the hailstorm happens, the roofers are knocking on doors and trying to get people new roofs. I heard a statistic yesterday that 78% of new roofs in America were paid in the last year by insurance companies. So the insurance companies are they're bleeding when it comes to roofs. So they've become more strict on underwriting. So if you have a roof that's over 20 years in age, you're going to see either they won't write it or a surcharge or a shared deductible, also higher deductibles for wind and hail claims, because now they need the insured, the client, your clients, to be part of that self-insure, kind of share in the cost of the roofs. Otherwise, it's going to put the insurance companies out of business. So these severe convective storms, the wind, the hail, the tornadoes, this is truly what's causing the insurance companies to pay out so much. And these convective storms, as you can see from the graph here, they're just getting more and more frequent. And the payouts from these storms are also rising with the frequency. So it truly does happen throughout the year, over the years. You can see where typically the summer months through the end of the year, it ramps up. When we think about flood, I think a lot of people need to kind of change their mindset when it comes to flood, because most people think I only should have flood insurance if I'm in an actual flood zone. The stat here is that most floods happen in non-flood zones, the flood claims, and you can get flood insurance if you don't live in a flood zone, and it's actually quite cheap. So I was actually at an insurance conference recently where they predicted, one of the top carriers predicted that in the next 5 to 7 years, that in order to get a mortgage anywhere in this country, you will not just need to get homeowners insurance, but you will need to get flood insurance. And it's because the water and our infrastructure just cannot handle the amount of water that's coming from the sky. And so you don't even need to be near a body of water or have, the lake or the pond in your backyard. It is truly just water is coming down so fast that it's rising and coming up and into the homes. So the FEMA program, the NFIP program, our government program, with FEMA assisting in these disasters is an option. Everyone should be able to secure flood through the NFIP program. And a lot of our carriers are now offering private flood, which if that option is available and it's cost effective, we always recommend, because working with the government versus working with a private carrier, oftentimes you're going to get that attention way faster and have better claim experience. Here you can just see the increase in the number of these flash flood emergencies. That story with the summer camp last year with those little girls, it is just, this water is coming fast and furious. The last 5 years, we've had the most active in the past decade. The warmer the atmosphere, the less capable that the moisture is being soaked up, and the intense rains. So here you can kind of just see a look back over the last 5 years, these numbers of flash flood emergencies. These are the top states where we're seeing these flash floods. Again, don't need to be in a flood zone in order to get that flood insurance, and can be very cheap. So here you can kind of just see some different stories from different states, and 6.5 inches falling from the sky in one morning. It really is truly just it's a lot of water, and not a lot of places to put it. So with all this weather, we're obviously seeing increased costs when it comes to premiums for that homeowner's protection. Specifically in luxury home values, if we look at the total just inventory that remains and looking at it from pre-pandemic to where it's at now, Most homes are seeing that increase when you have a home that has a value of $1 million or more. We're seeing quite the increase of construction costs and how much things cost. Labor is also considered to be the one of the biggest challenges in the residential construction world. So, because it costs more to pay for your builder to build the home and get the labor that they need to build, um, the insurance companies have to factor that in too. It's not just about the cost of the lumber; it's a cost of, you know, the humans that are banging the nails into the lumber. We have seen a stabilization in um, the actual um, costs of the actual materials. We're seeing post COVID that a lot of the stuff that was coming from foreign areas are the costs aren't as steep as it was. Um, what will happen with the tariffs is still kind of unknown because some of these places have tariffs or they don't or they're coming, so it's still unknown. But we have seen some relief, at least in since from prior years post COVID, of the actual cost of the actual copper, electrical, drywall to handle any sort of replacement of these homes. So when regular insurance becomes more challenging because you are staring out at the ocean, or in a coastal area. These are hot real estate places to live. Everyone wants to have that vacation home or make it their permanent residence. From a location standpoint, um, it just becomes more challenging to be able to even get a quote. A lot of clients are just seeing non-renewals when they have had no claims, when they've paid their premium every, year on time, and there are no issues. What I say to clients is it's not you, it's them. It's the carrier. It's the carrier looking at their book and saying from a predictive kind of experience or what they think is going to potentially lead to additional losses because of your zip code, because of the type of roof you have, siding you have. They clean the book, and certain years they clean a little harder than others. So, for clients who are experiencing non renewals, when they haven't had any claims and have been with the same carrier for forever, it's personal and they're offended. And oftentimes the broker has not given them a long enough heads up. So then they're scrambling to try to find another carrier. And it can be very emotional. So, planning ahead is critical, working with a broker to understand. In our office, we get lists of who's being non renewed several months in advance so that we can not only alert the insured, but also get out to market to see what other options there are out there. So, especially in clients who live in wildfire zones or on the coast, and there's rumblings of carriers pulling out, staying ahead and making sure that they have a person that they know who they can talk to is critical. So, there are times when your carrier says no, and we then turn to what's called the non admitted market. So, all of the carriers that you see commercials on, all the carriers that I work with, um, they have to file with the state. They're admitted. They file their rates, they file their policy forms. And they, if a risk does not fit into their underwriting box, they obviously cannot provide terms. When something is admitted, they're backed by the government, and if they go out of business, your claim is going to be paid. Everyone has heard of the most famous non-admitted carrier, that is Lloyd's of London. And so it used to be that there were very few non-admitted carriers, like specialty carriers, also known as excess and surplus lines, where if you were kicked out of the admitted world, that's where you went. They don't have to file with the state. They have free reign when it comes to pricing and the types of coverages that they're going to include on your policy. And it's better than no insurance, but in the past, it's kind of had this feel of like the wild, wild west. You don't know what you're going to get. And there's no regulation. Now, because of all the weather that's, taking over, and because the standard admitted carriers' appetites have shrunk, the non-admitted market has boomed. And all of the carriers in the high net worth space have said, we're going to open up non-admitted departments. So you still have a Chubb adjuster. You still have Pure's financial backing. You still have Cincinnati's reputation. But in general, this E&S, this non-admitted market, has seen skyrocketed premiums being written because this is many people's only option. Having these carriers now enter this space is huge because now we have options. We're not working with smaller carriers with financial backings that are questionable. So it's not scary anymore. It's actually becoming quite normal. And so walking clients through understanding what a non-admitted is, what the risks are, but why this is the right move for them is huge. And having a broker and an advisor to explain this to them is really important. Obviously, this map makes sense as far as where we're seeing the most non-admitted excess and surplus lines states. It's a lot of the coast. It's a lot of California. The Palisades fire have made it very challenging to secure coverage in California right now, specifically LA County and surrounding counties. Northern California, there's a little bit more of an appetite. But that being said, the non-admitted market, it's not guaranteed that we can get them coverage here. It's just that they have a higher chance. The premiums are going to be higher, the coverage is going to be less, but at least it's better than not knowing who the carrier is and or having to self-insure. So who are these clients? It's not just the ones that are living in the locations that would warrant scary weather and, carriers pulling out. Yes, that would say is the number one reason, but you could have a client who lives in the Midwest, no major weather issues per se, other than those convective storms, but someone who has a very unique home, someone who's, a home that's on the historic registry, has custom construction that's very unique, homes that are not near fire departments in the middle of nowhere. Depending on how remote they are, insurance companies don't like that. They want to know that if the fire happens, that the fire department will be there quickly. Also, it could have nothing to do with the actual property, but more about the person that owns the property. If they have had significant claims history, frequency, or a really big bad claim, if there's specific exposures depending on their profile. We're talking about someone who's a very public persona, could be a little bit more risky. Our professional athletes often see more non-admitted type of risks. And then also just in general, specialty collections or assets. So when you're very unique or have a unlucky claims history in your past, the look back is 5 years, the non-admitted market is something that may be your only option. So again, just to kind of summarize, the policies are different. They're not filed with the states. They are usually a little bit skinnier on the coverages. And it is a different claims process than the admitted insurance, but you're still getting that carrier's adjuster if you're with a high net worth carrier. Some of the other excess and surplus lines uh, adjusters are not as hands-on. And so that claim experience when you have a non-admitted carrier can be challenging and frustrating. And it's going to be more expensive. The deductibles are also going to be higher, and there's a tax involved, a state tax, because you're not using a carrier that's filed with the state. But again, oftentimes this is the right carrier for you and far better option than what else would be out there and or self-insuring. So when we think about what clients can do to put themselves in the right situation, especially in locations where weather is a challenge, there's a lot of things that you can do as the homeowner to try to put you in the best possible position to be with an admitted carrier, to get good rate, and to not be on the non-renewed list. First, absolutely being proactive with your broker or your agent to make sure that you know where you are with the carrier, what they're requiring, if there's any new changes to the policy. Making sure that you have all of your documentation, especially if you've done any home improvements to the house, new roof, new mechanicals, anything that could entice the insurance company to say, this is an extra good risk, we need to stay on it. And then there's a lot of different personal, like risk management tools that someone could install in their homes. The water leak detection systems. This is a automatic water shutoff device that's tied to your main water line, and it gets to know your flow. A plumber installs it, and if it notices that more than typical water is being expressed, it will shut off your main water line. That device has saved millions of dollars when it comes to water claims. Security features, the burglar and fire alarms, low temperature monitors, the hurricane proof windows, doors, making sure that, all of the brush around your house is, if you're in a wildfire area, is cleared. There's just a lot that people can do. You can't just live in your house and think that, the insurance company is going to tell you what to do. Oftentimes being proactive can make your risk even more um, safe, if you will, from a non-renewal, or if you're shopping your coverage, even more desirable for another carrier that could lead to lower premium or better coverage. So, what is the best way to make clients feel like they have support during these times, especially with the weather, continuing to be the way it is? Our team here, we have 48 years of collective experience. We're Whether they use us or someone else, the goal here is to every client should feel supported, that they have someone, that they have a person that they can call. You can go to the next slide. Someone who will take their current coverages and compare them to what else is out in the market. If someone has been with the same carrier for years and years and years, um, it's to their detriment. Sitting down and having a review with a client every 3 to 5 years to make sure that their coverages are correct, their carriers within the market. I mean, a broker should be doing this every year, but as an advisor, for you to suggest this or ask when's the last time you've done this is really important. Finding a partner that is educational. It's not a sales pitch. You want whoever your partner is that does these reviews on your behalf to make this feel like it's an extension of your team. Educating on what these coverages actually mean, what weather exposures you actually have, and how your policy is being protected. Identifying the gaps. We want clients to know exactly what they have and have no surprises if and when they have a claim. And then also finding a partner that says, look, this is what else is out there, but if you want to stay where you're at, there's no pressure to make a change. We're just an extension of your advisory group, and we're here to just educate. So if you want to go back to your current broker and take what we have found, or current carrier and take what we have found and make these changes, then everybody sleeps better at night. So again, anytime, whether you're working with us or with another partner, working with the way it works to do these reviews, you submit or reach out to a partner. They gather the details. Typically, it's policy documents, deck pages, um, it's dates of birth, driver's license numbers, asking questions, especially when you're in a coastal area or an area that has had some challenging weather. Um, Also, just submitting documents is not enough. Whoever your partner is should have a one-on-one consultation with either you as the advisor or the client directly. Because what happens is a lot of times things in conversation come up. Like, oh, I'm not in a flood zone, but every time it rains, I get really nervous because, my backyard gets really soupy, right? So these conversations lead to a lot of things that may not come up if we just got deck pages, dates of birth, and driver's license numbers. And then that final audit review, again, your partner should never just be sending you a spreadsheet and saying, here you go. It's sitting down, going through with the client, answering their questions, answering your questions, working together and in a partnership to really make sure that everybody's on the same page. And then talking about next steps. Is this something that you make a change, make a switch when it comes to coverages and carriers, or they stay put, but at least now they know exactly what gaps to fill and what coverages they need to really look at again. So, for us, when it comes to Brunswick, if you're interested in partnering, and just in general in the high net worth space. So, Stacy mentioned in the beginning that no two carriers are the same, and the Jake from State Farm is very different than the high net worth carriers. And we represent high net worth carriers. And what is high net worth? That is usually a question that always comes up. High net worth has actually nothing to do with the net worth. It's mostly driven by their primary dwelling. And if that primary dwelling has a replacement cost of $1 million or more. Now, certain states, especially those with challenging weather, have different minimums. So, like Florida, for example, usually the minimum is 1.5 or even 2 million in certain counties. Same with California. Usually the minimum is 2 million. So again, this is not what you could sell the house for, but what it would cost to rebuild it. So house burns down, clearing the rubble, replacing the foundation, rebuilding from a per square footage standpoint. So a lot of people say, well, I could sell my house for this, but no, it's about how much it would cost to replace it. So if their home has a replacement cost of $1 million or more, again, geographically, that can range um, from a house size. In some states that could be, 3,500 square feet. In other areas that are more, by bigger cities, that could be as little as 1,500 square feet as a minimum. The other thing to think about is from a total net worth standpoint, because that's kind of where the umbrella conversation comes in. Umbrella is additional liability that goes over all of your underlying policies. Every single one of your clients should have an umbrella, um, and they should have the right limit of umbrella. I was at an insurance conference recently where they said 5 million is the new 1 million, that everyone with means should have a minimum of $5 million of umbrella. The other thing is it's cheap. To buy that umbrella, we can write up to 100 million. What is the right amount is the golden question. Again, it's a liability. So who are you going to injure? Hopefully no one. What property are you going to damage that's your fault? Hopefully nothing. But that's the lawsuits that could come back on you. And we have plenty of clients that are worth more than 100 million that say 50 million, I'll self-insure the rest. On the other hand, we have clients that are, maybe their net worth right now is just under 10, but they want to have 20 for future earnings or future events or just because they can get it and it's cheap. Why not? You're building a moat around your assets. So again, from an advisor perspective, you're the one that's building these assets. So to not bring up in the conversation about protecting these assets, it's just mind boggling to me that this is not something that advisors are proactively really making frontal in their conversations when it comes to planning. So hopefully after this talk, you are inspired to make sure that this is a proactive conversation. Again, it's about thoughtful advice, long-term protection, clients who are price shopping. Of course, price is important. We don't want to, throw that out the window. But when all things are considered and you understand what you're buying, I think all of our clients appreciate that you get what you pay for. And there are times where we will move someone from a mass market carrier to a high net worth carrier where it is more coverage, more investment, more peace of mind. There are also times where we move someone from a mass market carrier to a high net worth carrier and we save them money. So it really is case by case. This is not necessarily you're going to pay more always. That's why doing a review is so important. And that's why talking through these risks are so important, because when a mass market carrier sees a large home, nice cars, an art and jewelry schedule, and a $5 to $10 million umbrella, and they're on the coast, they just freak out, right? So they just jack up the price. High net worth carriers, this is all they do all day long. So it really is finding a partner that can help understand multiple state residents, looking at new home, new construction, renovations, vacant homes. All of these things really make a difference. So we wanted to kind of jump into some different case studies to kind of just show what can happen, how we handled it, and maybe some of these will resonate with you and you can relate to some of your clients. Here, we had a client who was in a wildfire zone, and they just felt like they had no one to call. They just felt like their broker was not there anymore. He was kind of on the edge of retirement, or it was selling or something, and they were just kind of MIA. It was a secondary residence that was in the wildfire prone area, and they felt like they had no carrier to go to. They were stuck. They didn't feel like they were being shown options, and were just kind of told, renew this policy every year, and didn't even know if the policy was even going to pay the claim if they had it. We kind of were introduced to this client through an advisor. We took and looked at the entire picture, and we came in and packaged everything together. We ended up reducing his total homeowner premium between both homes by 35%. He had to install a burglar and fire alarm in that wildfire zone home, in his secondary home, which then opened up several more carriers as options. He was like, why didn't anybody tell me this years ago? I would have done it. I just didn't think I needed it. The neighborhood's safe. So just by installing that, opened up several more carriers. We cleaned up all of his other coverages, looked at his deductibles, and he was sitting on a $1 million umbrella. We upped that to 10. And still over total all in, the premium change was he saved 28%. This was another interesting one. We have a lot of clients who have homes in multiple states. This client specifically had homes in coastal locations as well. Some of the homes were truly uninsured because he couldn't get coverage. He only had a $5 million umbrella because that's the max that his mass market carrier would go. And he was deciding whether or not he wanted to make Florida his primary residence for tax reasons. But he was told by his carrier that if he did that and he got a Florida driver's license, that they wouldn't be able to not handle everything else in all the other states. With high net worth carriers, they understand that individuals have multiple homes in multiple states and would like to take advantage of tax savings through those, how they file for their taxes and their residency. So if in a high net worth carrier world, if you truly are spending 50%, or 49, 51, we have flexibility, and they're not going to require you to have your primary be wherever your driver's license is. So we were able to tell the story to the carriers and get him all packaged, all in one. We increased his coverages across the board. We doubled his umbrella to 10 million. There was one policy, one property, apologies, one property that we could not insure. The home was too small. It was not wind mitigated. It didn't have the hurricane windows and doors. So we weren't able to place it with our carrier, but we were able to at least guide him in the right direction to have a carrier, a broker that could place it with a carrier that actually was legit and we knew would actually pay out. There's a lot of very small carriers that are fly by night that I joke that our clients have a better financial backing than some of these carriers. So knowing the right people to get the right policies, if you can't get everything packaged all in one, is very important. And even though we didn't place that one policy, we still managed and handled everything as a quarterback. This guy, did he pay more? Yes, but gladly, because now he knows that all of his homes are properly insured with the right carriers, increasing that umbrella, and just feels like, most importantly, that he has someone to call in that time of need, or when he has a question, or when he buys a new car or adds a new piece of jewelry. Everyone should know who their person is. Here's another one that was living in Florida, wanted to establish residency. This happens a lot, so we don't need to spend a lot of time on this one, but basically moved him over, no issues, consolidated everything. He had a ton of gaps. He had a huge luxury car collection, and all of those cars with his mass market carrier were insured on actual cash value. So when that happens, it just means that if the car is totaled, the insurance company decides the value. Well, when you have luxury vehicles, collector vehicles, you know exactly how much that car is worth, and you want to be able to get a check for that exact amount. So on the high net worth carriers, agreed value means they put the exact amount of what they're going to pay out on that policy for that totaled car right on the policy. So he was very happy to have that. And then just consolidating, he had some gaps on his umbrella. But again, we see this a lot. Coastal states are lovely and people want to buy homes there. We've actually worked with clients before they've purchased to help them quote and see how much it would be. And we've had a few clients who've actually turned away from deals because once they figured out how much, and or if it's impossible to insure, it's killed the deal. So very important, I think, with this one also. We worked with them. One of his locations, he actually took what's called X wind. He excluded the wind and the hurricane coverage. So it was like 3 miles from the coast inland. He's had the property for years. He knows exactly what to expect when the storms come. Even the biggest storms that have hit him from a hurricane standpoint hasn't caused that much damage. And he said, to be able to save 60% of the premium for me to self-insure the hurricane, I'm happy to do it. So we're working with clients a lot now. If there's no mortgage on the property and the client has the financial capability, X Wind has become a very popular trend. This one was a client who just had a really bad claim experience in Florida. They were going through the claim. They couldn't decide whether or not it was going to be covered. The broker provided zero assistance or clarity, couldn't even get a call back. This client had properties in Ohio and in Florida. The Ohio policy was with Chubb. The Florida policy was with a different carrier. And once we walked through the options with her and showed her what she could get if she, again, took the Florida condo, removing the wind coverage, saved her 21%. And she gladly did it. She's on like the seventh floor of a high rise, especially, in condos. The condo association is responsible for the outside of the building. She's lived there for decades and has never had any issues. And because we took off the wind coverage, Chubb was willing to take on the whole account, and she loves Chubb. So she was happy. We were happy. Chubb was happy. And everyone came out protected properly. So here, if you are interested in our referral process, we make it super easy. Again, this should just, if you don't work with us, anyone you work with should make it easy. We have a special website where you can enter your information, your client's information, and we'll start the process. We'll email the client, we'll CC you if you'd like, and just gather all the information from the client direct. We make it super easy. Again, anybody you work with, it should not be, this should not be something that becomes your full-time job. It should truly be a tool in your toolbox. It's an easy handoff that your partner is there to make this as simple as possible for you and the client. We have a bunch of other topics that we can dive into that are CFP approved. And if anyone has any specific questions that they have with a client that comes up afterwards, we'll make sure that Stacy can share my contact information. And whether it's a review for a client or just a one-off question about anything property and casualty, happy to be a resource. Great. Thank you.